Hello traders, so in this lesson, we're going to cover multi-day liquidity using internal and external liquidity. So for recapping purposes, this is our example of external liquidity. So you have your swing formed, price approaches your swing and rejects, forming your external liquidity. And now price will be attracted to this level. And here's an example of internal liquidity. Price forms your supply zone and price rejects from your supply zone. So anybody that's sold at this level, their stop losses would be right above. And now this level will act as a magnet for internal liquidity. So the main purpose of this lesson is we want to avoid the three-step process all happening in one day. So basically your liquidity being built, whether it's internal or external, in this case, external, your stop hunt, and your return to origin, which is your retest. You want to avoid all of this happening in one day. Why? Because you would rather spread it, and that's where the probabilities are in your favor. So what you would rather want to see is, you'd rather want to see on Tuesday your liquidity being built. On Wednesday, you get a stop hunt. And you can get a return to origin either on Wednesday also, or you can get it on Thursday. This is a way higher probability than all of this occurring on one day. Let me just draw it out just so you guys can understand. So we had a rejection right here, a rejection from a supply level, which means the stop losses are right here. Price takes this level out by trapping all the buyers and taking out the stop losses. And this would be your return to origin, which would be your retest. So how can you use this if your setup does not consist of a retest? You're not a retest trader. You're strictly trading continuations. And if you're trading continuations, you really don't need a return to origin. So how would you use this? So instead of your three-step being spread over more than a day, you would want your liquidity accumulation being built over one day. So something like this. Your liquidity being built, and it took 2 days to build your liquidity. So now what you're waiting for is for your liquidity to be taken out. Once your liquidity is taken out and price comes back inside the range, of course, if you're a continuation trader, the correct way to trade continuations is to wait till the base is broken. So once your base is broken, you can take a conservative stop loss right here. Or what you could also do is pull out your fib, mark out the low of your base and the high, which would be your stop hunt, and have your stop loss a little bit above your extreme zone. So somewhere right here. And then what you're waiting for is once price break this level, you're in the trade. So let's take a look at this example. So you had your swing right here. And you could see that from this extreme level, price been trapping this level for multiple days, which is 2 days in this case. Price rejected here, price rejected here, price rejected here. So over a span of 2 days, price been rejecting. So what you're waiting for now is your stop hunt. And if you're a continuation trader, you're looking to enter right below your base. So now that price took out the stop losses and came back inside of the range, what you're looking for now is your entry. And of course, this is not a entry lesson, but we're going to cover this anyways. So let's say for a conservative stop loss, it would be right above. And your exit will always be the next point of contention, which would be any major base. So in this case, you have a base right here. You would look to exit at this base or even before. And before any entry, you're not strictly looking at the liquidity. You always want to look to the left, and you always want to see what other confluences you have for your entry, and not just trade, oh, you have a multi-day liquidity and a stop hunt and price came back inside of the range and it broke your base. That means you should enter the trade. You always want to look for more context, obviously news context, and you always want to look at if you have clear traffic, which in this case you have this gap right here that needs to be filled. So this is another context for your trade. So let's take a look at this example. So on Tuesday, you had your liquidity being built. And on Wednesday, you had your stop hunt. So what would you be looking for? Now, if you're a continuation trader, you should strictly look for continuation setups. If you are a reversal trader, you should strictly look for reversal setups. But let's say you're a flexible trader, and based on everything that I explained previously in the previous segments, what would you be looking for? Would you be looking for a continuation right here? So let's say once price breaks this level, you're looking for a continuation, an entry once price breaks this level, and your TP would obviously be your next point of rejection, which would be this level right here, or you are looking for price to break this level and come back, and now you're starting to look at your point of interest, which could be this breaker right here, or it could be your extreme zone. Which one of these would you be looking for based on everything that I spoke on previously? Well, in this case, we would be looking for a break of range and come back looking for point of interest. Why? Because like I said previously, if you're looking for a continuation setup, you're looking for the liquidity to be built over a span of 2 days. And in this case, the liquidity was built during a span of 1 day and the stop hunt occurred the next day. Now, if this would have happened, price rejected here, and then again rejected here to later on stop hunt, then you can start looking for a continuation setup. But the fact that liquidity was built in 1 day and the next day instantly price took out that level and came back inside of the micro range, now you're looking for a rejection back inside of the range and an expansion. So now price broke this level. So now you're marking your point of interest. You have your shelf right here. So we're going to mark it as our breaker. And you can pull out your fib and mark your extreme zone. So these are the two entries that you would be looking for. And obviously you want to combine everything that you learned in all the previous lessons, all my entry lessons, all my shelf lessons, everything like that. And you would come to a more concise conclusion, including the confirmations. So let's take a look at this example. So what happened here? Price formed your swing and price rejected from the swing extreme. So this is your liquidity now. And the initial swing was on Tuesday and the retest was on Wednesday. So now we know that liquidity took 2 days to be built. So what are we looking for now? The fact that liquidity took 2 days to be built, we understand that there's a high possibility of a continuation. So let's say price heads up here, stop hunts, and then comes back inside of the range. Once price reaches this level, we're looking to get in a buy position here. And why a buy position once the structure breaking and not a retest back to a point of interest? Because the liquidity took 2 days. Now, let's say the liquidity didn't take 2 days. Now, let's say the purge, the initial swing occurred here. Once this new day opened, price stop hunted and then broke structure. Then you would be waiting for a retest. But the fact that the liquidity took 2 days, then we are looking for a continuation. So let's see. So what are we waiting for now? Once price breaks this level, we are looking for a long entry. So now once price reaches this level, we're looking for a long entry. And where would our TP be? You always want to look to the left and see any point where price can find rejection. Where here you don't see a clear price action level, so this is where you pull your support and resistance level and find a high rejection point. As you can see, price has been rejecting from this level multiple times and struggle to stay above this level. So this would be our TP. And alongside that, we can take an early TP right here at this level of liquidity. And we can take another partial at this level of liquidity. And where would our stop loss be? Our stop loss would be pull out your fib, your swing high, swing low. And like we said previously, a little bit beneath your extreme. So somewhere right here. And price reached all our targets and is reaching even higher. And as a bonus, let's touch on the highest form of multi-day liquidity. So you had your major swing here. You had your major swing here. You had your extreme level here. So if you take a look, price rejected this level on Tuesday and on Wednesday. So this by far is the highest level of liquidity. So whenever this level is taken out, you can instantly say, seller's been trying to sell the entire week. Trying to sell here, price coming up here, trying to sell here, and all kinds of traders are being trapped. Not only your supply and demand traders, you also have your smart money traders being trapped here at this order block here, trading this order block here, and on top of all that, you have your traditional support and resistance traders being trapped right here too. So a lot of stop losses are resting right here. A lot of stop losses are resting right here. So on Wednesday, when price did eventually take this level out, and purge all the stop losses and fake out buyers, as price broke this level and took out their stop losses, a lot of traders start to get in a buy position thinking, okay, this is a change of character. Price is going to change direction, for price just to trap them and go the opposite way. So when you have a 3-day long liquidity built, you have a high probability chance of getting a continuation trade without a retest because of the selling pressure would be too much. And why is that? Because there's no more point of retracing back and giving traders a chance to enter the market, because the market's already been trapping them since Monday, Tuesday, and early session Wednesday. So when price did eventually take out all these sellers out, there's no point of breaking this structure here and retracing back, giving traders another chance to get in a trade and giving them a short signal. So what you'd want to do is, once price breaks this level, you are in a buy position. And your stop loss would be your next level of rejection, which would be this extreme bearish bullish order block. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and make sure you visit our website and use code ETMARMY for 20% off.